Chapter 9-3A, we're going to be looking at the calculation of taxable earnings and employer payroll taxes and preparation of journal entry. So in your textbook for the back of Chapter 9, for example 3A, we have a list of all of our employees. You also have that in front of you. And then they give us their cumulative pay before current earnings and then our gross pay, current gross pay. And then we're going to use the same rates we've been using, 6.2% for Social Security, 1.45% for Medicare, 0.6% for FUTA, and 5.4% for SUTA, and I'm sorry, 0.6% for FUTA. And remember, unemployment taxes are only first 7,000 of each individual earning, and the Social Security is only on the first 110,100 of each individual's earnings. So the book tells us this. It gives us their names and it tells us their current earnings. Okay, so we have to take a look at their current earnings and decide how much is subject to unemployment taxes and how much is subject to Social Security taxes. Okay, so here you'll have to look back to the book, and it tells us that our first employee has earned $6,600 so far. So if we take the $6,600 plus her current earnings, that's going to put her well above the $7,000. So if she has earned $6,600 so far, only $400 more is going to be subject to her unemployment taxes. So you can take 7,000 times that 6,600, and that's where this 400 comes from. But she's not anywhere near the amount for Social Security tax, so all of her current earnings are subject to Social Security tax. Kiesling, our next one, has earned $6,150 so far. So we're going to take the $7,000 max for unemployment minus the $6,150, and that gives us the $850. But she's also nowhere near the total maximum for Social Security, so all of her gross wages are subject to Social Security tax. Now you'll notice that for our next individuals, they've all made well over $7,000, so we're no longer paying unemployment taxes on behalf of any of these employees. So that's why you see zeros in all of these columns based on the book and their cumulative pay. For example, Palmer has made $55,200 so far. So we stopped paying unemployment taxes on her quite a while ago. But that $55,000, she's not near the $110,000. So all of her paycheck is subject to Social Security. Same with these next two. They're well above the $7,000 in total earnings, but well below the $110,100. So all of their paychecks are subject to Social Security. Then we take a look at our last one. So our last employee here has made $108,230. So this $2,850, if we were to add those together, that would put her over the $110,100. So we're going to take the $110,100 maximum minus what the book has of $108,230 as her cumulative pay, and that's where this $1,870 come from. So even though her paycheck today is $2,850, only $1,870 of it is subject to Social Security tax. So then I'm going to total all of my columns, and this is important because keep in mind that our current earnings, this amount is going to be used to calculate Medicare tax, this amount is going to be used to calculate FUTA and SUTA, and this amount is going to be used to calculate Social Security. And you can see that happening down here. Social Security amount times our rate, Medicare amount times our rate, FUTA and SUTA from the unemployment comp times the rate. And we end up with total employer payroll taxes of $919.24. Then we're going to do our journal entry. So total payroll taxes expenses of $919.24, and then we're going to take our totals from these columns. Okay, so Social Security, Medicare tax payable, FUTA tax payable, and SUTA tax payable, and that's how the journal entry is made.